Hello, everybody. Thanks for being here. Welcome to this panel, which will explore the integration of DeFi use cases into capital markets. So it doesn't matter if you're from the DeFi side, if you're from TradFi, or everything in between, you're in the right place. So my name is Niki Ariyasinghe from Chainlink Labs, and I have the great pleasure of moderating this panel with representatives from Arta, GLEIF, Archax, and InvestorX. So to kick things off, I'd like to ask each of our panelists to introduce themselves, say a little bit about their business, and also your connection into decentralized use cases, capital markets, and tokenization in general. Eddie, should we start with you?
Sure, yeah. Eddie Lau from Arta Tefin. We're a listed company in Hong Kong carrying a lot of financial licenses, which means that we try to turn TradFi service into DeFi, into blockchain-based, from brokerage asset management to custodian. And also we are involved in payment with CBDCs and stablecoins.
Yeah, thanks, Niki, and Vince, if you're out there, for inviting us up here. My name is Julian. I'm co-founder, CEO of 2 licensed RWA platforms. InvestorX is based in Singapore as a broker-dealer and exchange license for any RWA on any public chain. Today, I'll be talking about IXSwap. It's our sister platform. We started building about 3.5 years ago when RWAs were called STOs and security tokens. There was no liquidity solutions in the marketplace, so we embarked on a mission to try to build the Uniswap for RWA, where anyone with an RWA security equity token could start a liquidity pool. So that was the original model. It went and got all its own licenses, retail licenses. We also built a launch pad so we could create more pools. And we're now soon to launch the first lending and borrowing collateralization for RWA tokens as well. Thank you.
So my name is Alexandre Kech. I'm the CEO of the Global Legal Entity Identifier Foundation, the GLEIF. GLEIF is a sort of global big business registry to identify legal entities who are involved in transaction, be it capital markets, payments, supply chain, ESG, as an identifier for organizations. The reason I'm sitting here is because we also have a decentralized identity system for companies and the individuals working for that companies that can be used to verify identity, authenticate companies and their staff, and also permission those entities on blockchain and on Web2 platforms.
Good afternoon, everybody. Simon here from Archax. For those of you that don't know Archax, we are based in the UK. We're FCA regulated there as an exchange, a broker, and a custodian for crypto and digital assets. Our focus is very much kind of institutional. You know, we all come from the TradFi capital market space, but big believers in the power of blockchain and tokenization. So very involved in the tokenization of real-world assets, partner with some of the biggest asset managers in the world to do that. Very excited to be here at SmartCon. Very excited to be here in Asia. Although we're based in London and regulated in London, we'll be regulated in the EU very soon. We're talking to the regulators out here in Asia as well. So, you know, excited to be out here talking further about this, and thanks for inviting me today.
Wonderful. So for the benefit of the audience, let's zoom out for a minute. You know, we operate in a very fast-moving industry, but let's look at the trends overall, provide an overview. So when we think about the benefits, the drivers of why organizations are now building decentralized businesses focused on tokenization in this space, and you know, relating to your own businesses or even just the broader sector, what do you think are those benefits and drivers that really stand out, and as to, you know, why are they doing it? Eddie?
Well, shall we start with Alex, or you want me to go for it?
Go for it.
Well, people tend to talk about efficiency, so I won't talk about it. They talk about atomic settlement, I won't talk about it. Talk about transparency, maybe we'll talk a little bit about it. Because I guess the best way to illustrate is if you want to put your money to work and you want to make more than a risk-free rate, then you go buy a tokenized treasury fund, that's fine, that's all good. You know, you have it by now. You're greedy. Your wife asks you for more money. You need to make that extra 5%, otherwise you can't go home. So you want to put that into daily liquidity instruments that is transparent enough, because now you know what, you're doing something way more dangerous than you should, but you still want to make that 5% because you need it. I think that's where blockchain also brings in things that, I mean, in a traditional capital market, something that you won't even have, you can't even imagine. But with the use of blockchain, now that your fund admin, your transfer agents, your broker, your prime broker, your custodian, they all add together to provide you that level of transparency And guess what? With the blockchain, you can display them to the right person. Be permissions or permissionless, doesn't matter. So the work that we do, we use permissionless blockchain, I want to highlight. Otherwise, I don't think we'll be invited to SmartCon, to be honest. But with that said, if it's a regulated token, capital market, security token, then you need a permission process. Permission token on permissionless blockchain. So with innovations, now we can bring transparency from from data that is available, but that wasn't displayed. And you show them in real-time terms, and guess what? Because now you dare to show people what you do, and you say you do what you say, and you deliver what you said, and investors get what they think they would get, and these are verifiable, obviously. Then you get more money. So we are distributing one. We are going to distribute AI trading tokens in U.S. equities. Basically high-frequency trading, 5 minutes trading per trade will last 5 minutes, and then you can see all the data, you can see all the results. It's basically daily liquidity. You can see all this in one tokens. And guess who will do the CCIP and POR? That's Chainlink. You can't go wrong with that.
So it starts with transparency, but ends in yield. Is a good summary, Eddie? Julian?
Yeah, I like to break it down into maybe 5 things. So the 101 is digital shares better than paper share, or the DNA of blockchain. Number 2 is if we use like a tokenized share of a VC fund is a good example. If you have, if you did that, you could actually bring that RWA token to like a platform like IXSwap and actually create a liquidity pool for it and create some trading. That's pretty significant value increase versus the paper share. You also be able to, with smart contracts, blockchains, create better versions of VC funds, tokenizing a traditional type of VC concept, but instead of having this 10 to 20-year hold period, people could exchange it and create some liquidity pools. So that's pretty big. I think also you have these whole new distribution channels. So if you think about the RWA. The fastest growing, or at least the most well-known RWA assets today have been the tokenized treasuries, money market funds, put on chain to give the crypto holders, digital asset holders, an opportunity to participate in yield from the TradFi market. So you have this whole new kind of distribution channels, and we're plugging into crypto exchanges and DeFi wallets and all of these Web3 platforms that want to sell more assets but don't have the licenses with the security side of things. So you're seeing like a world, and the last one, which is just beginning, which I think is the biggest use case, is using RWAs as collateral and lending and borrowing. So taking again the concept of a VC token, pretty useless when you have a share of a VC fund. You just sit around waiting for distributions. If you could actually take it to a platform and use it as collateral and borrow against that, that's enormous. So we see like 4 or 5 major value propositions on wide tokenized assets that each are kind of industries in their own right. It's still fairly early, but we're seeing real traction in every single one of those buckets as well.
Wonderful. Simon?
Yeah, I mean, I'll sort of echo a bit of what Julian and Eddie has said, but I mean, first up, I mean, Archax currently we're very much centralized. We're a centralized exchange. We're a centralized custodian. It's a centralized solution. But and the reason that's the case is because to be fully regulated, it's a real challenge for regulators because they kind of want someone to be in control. They want someone who's on the hook. So it is a challenge to sort of how regulators view the sort of the DeFi world, exciting though it is. And the challenge then also for institutions is they want to, because they are heavily regulated, they want to transact on regulated venues and regulated services too. So there is a challenge there, but that's not to say it can't happen. I mean, we are working on this now. I mean, we've taken a fork of the Uniswap technology, we've taken a fork of the Aave technology, and we're kind of developing our own regulated versions of that. So you kind of underneath a regulated umbrella, you have regulated instruments on those those DeFi venues. And I think that, that is hugely exciting. Coming back to what Julian was saying, tokenized money market funds, I mean, they are of the moment, there's a lot of them around, and they are really interesting because you basically, in the traditional world, you invest in a money market fund, you get your 5% yield. That's kind of the end of the relationship. In the digital world, you invest in your tokenized money market fund, you get a token. Suddenly, you've got this token you can use as collateral. Like Julian said, you could borrow against it, lend it out, or whatever. But you can also use it as a store of value. It's almost like a yield-bearing currency that can move around in between different institutions. And I think those kind of things are really exciting, and that's where the real innovation kicks in.
No, absolutely. So let's change tact a little bit. Alex, over to you. Firstly, thank you for teaching me the correct pronunciation of GLEIF. I've been mispronouncing it for 12 months, saying GLEIF, so apologies. But just as an overview, and we'll talk a little bit more about digital identity in a minute, but how do you think about decentralization and the value of decentralization in the organization you're building?
Well, interestingly, the Global AI Foundation has been built as a decentralized organization. So legal entities are not incorporated at global level, they are incorporated at national level, and always will be. So the global LEI system is based on a network of legal entity LEI issuers who are present in the various markets, and when they need to onboard a new legal entity on the GLEIF system, they will verify the identification of that company based on national records. So by default, it needs to be decentralized. It's, the way it's also decentralized and actually self-sovereign is that the company is in charge of asking for the legal entity identifier and to maintain their data, meaning that they are in control of the data that is published on the Global LEI Foundation, website and database. So this decentralized aspect is a must if you want to deal with legal entities and services to legal entities, because they are incorporated at national level, and if you want to bring them at global level, you need to take that into consideration. And self-sovereign is also very important, because you need to ensure that those companies are able to manage their own data themselves and maintain their data on that system for them to trust the system. So the Global AI Foundation has been built as a decentralized infrastructure, and very naturally, when digitalization in general came along, we looked at how can we enable that analog service on digital through self-sovereign identity and verifiable credential construct, which enables then those companies to identify themselves on digital platform in a verifiable way, and also the people working, acting on behalf of that company through verifiable credential, to be able to identify themselves on digital services. The system has been built in the cloud to be completely technology agnostic, in a way that it can be plugged into a traditional Web 2 platform, but also into blockchain A, blockchain B, blockchain C, in a way that the identity is portable, and that the credentials issued by that legal entity are also portable. So that's why I'm here at Chainlink, obviously, conference, because I need companies like Chainlink to enable that interoperability in the chains, this off-chain, on-chain verification of credentials, and I'm very excited to work with Chainlink on that.
Wonderful. So I think, love to come back to the digital identity piece in a minute. But firstly, I just wanted to pick on a couple of threads from earlier in the discussions. We're talking about assets that are being, where we're seeing lots of demand. So obviously, tokenized money market funds were mentioned. We were discussing stable coins earlier. But starting with Eddie, just what do you think is the particular asset type that is of most interest, or where you're seeing the most demand, and why that particular asset in your particular business?
Well, two types. One is the higher risk type of asset than treasuries. So things that you want to invest because you want to earn more, but you're not sure. Things that you want to know more before you invest, and after you invest, you want even want to know more, because now your money is at stake. So higher risk type of strategy, hedge funds, namely liquid hedge funds. Not so much in private equity, to be honest. So that's one set, big market, by the way. And then gold, lots of demand in gold. By the way, you guys are in Hong Kong. Some people may not be watching it from Hong Kong, but gold, absolutely huge here. I think this week I again received 2 requests from gold operators, not crypto people, to tokenize their gold or gold mine for two reasons. One, they think they can sell for better prices. Not true, but unfortunately. Two is they thought they can raise money faster and better. Absolutely. So gold token of all sort of use, gold token of all sort of forms, absolutely hottest topic in this area.
Yeah, I think, so what's the fact is that most of the tokenized treasuries, it's a very valuable product for the ecosystem, but it's not very interesting. Apologies if that's what you work on. It's actually predominantly only for high net worth accredited investors. I think BlackRock's Biddle treasuries are $5 million buy-in. So in the current space of blockchain, there's a massive confusion that utility tokens of RWA platforms are actually real asset tokens. What does that mean? IXSwap has its own utility token, IXS, it's a cryptocurrency. It's not a real asset token. Ondo's platform token is not a real asset token. Behind the platforms, the tokenized treasuries. So we've got this parallel universe going on where crypto, RWA utility tokens were the second best performing tokens behind meme coins this year, I think. They're not real world asset tokens. On the flip side, the actual real asset tokens are predominantly for these treasuries, money market funds for high net worth. And that's because hardly anyone in the world's got any retail licenses. So we spent many years securing those retail licenses, and our play has always been towards the private markets. I think tokenizing publicly traded assets or publicly traded like assets is very valuable, but that's not, I don't believe that's where the real opportunity is. I think it's the private markets that are multiple times bigger that can benefit a lot more from tokenization. And what our mission was always, how do you get structured and bring assets that anyone could make real asset tokens as easy to buy and sell as crypto and to make it for everyone. And so what we do is we've been focusing on tokenized startups, tokenized VC funds, really exciting stuff. That's kind of our focus in particular. But I think it's interesting to note as well, like, you've seen people out there tokenizing stocks, which initially a lot of people might think, what's the point of that? It's not for Hong Kong, it's not for Singapore and New York. It's for Nigeria and Indonesia and Vietnam and for the billions of people that don't get access to this. So we tokenized a VC fund. It was a POC type thing, 500,000 USDT in a couple of days and 400 investors. A lot of people are putting in 5 to 10 USDT and they were the countries, right? So it really depends on, when you say what's the appetite or where's the most appetite, I mean, it's really like, then the next question has to be sort of which asset, which market, which platform, and it's kind of evolving all over, but we've also done private credit, private debt, real estate, of course, so it's really exploding now, and it's asset agnostic, I would say, but the volumes are all different.
I love the contrast in use cases. Simon? What's our
yeah, I think it's interesting, in this tokenized world at the beginning, everyone was talking about real estate tokenization. That was going to be the big thing, but it's a great use case, but it's never really got that mass traction. Then there was a lot of talk about private markets. Again, a fantastic use case, but never really got the traction yet. I mean, where we're seeing traction the most at the moment is, is funds. I mean, money market funds at the moment, but with interest rates coming down, maybe they'll lose some of their shine, but funds generally are super interesting. I think fixed income, another really interesting area. I mean, fractionalization in that market is a great use case. So we're certainly seeing projects there. And finally, stablecoins. I mean, we're working on a stablecoin project here in Hong Kong with Eddie. We're not the issuer. We're the technology provider. We can provide the custody. We can do the tokenization. We can hold the assets. We can hold the end user coins as well. And we're seeing a number of projects in that. There's a lot of stablecoin people interested in issuing stablecoins currently, for sure. And different types of stablecoin, too.
No, absolutely. No, I love the contrast in particular use cases you're all seeing. Alex, I want to come back to the digital identity piece here. So I think members of the audience probably appreciate your views on why digital identity and solving this particular problem is so important. I think people hear it quite a lot, but it would be great to hear your perspective on why it's such an important problem to solve and why GLEIF's perspective and your unique approach will help to kind of solve that particular problem.
Why is it important? Well, the flip coin to a digital asset is the entity issuing that digital asset. So you don't have a securities, for example, without an issuer of the securities. And a securities represent a company. So being able to identify the company at global level the same way, in a standardized way, is an obvious achievement that you want to do because it helps in understanding what you're investing in. It's nice to have digital assets, but if you don't understand the company behind the securities or the private note or the bond that you're investing in, and you cannot clearly identify that company, and that happens a lot on blockchain, where you have fake tokens flowing around pretending to be issued by this company when they are actually just mimicking the token of that company, is essential. So I'm answering the why is it essential. You need to be able to create trust in a trustless environment, especially when used by the capital market industry and by the traditional financial industry. You need to be able to ensure that if you have an investment in that token, that the issuer of that token is effectively the company that is the UBS, for example, having issued that bond, for example. You need to also make sure that if you are interacting on a platform, a permission platform with counterparties, that those counterparties then have been properly verified by the provider of service, and ensure that you're not going to deal without knowing with sanctioned companies, for example. So identification of companies and even people acting on behalf of that company, signing transactions on behalf of that companies, physically on paper or digitally on platforms, it has always been an essential component of a functioning marketplace, and will also be an important component of a functional marketplace on blockchain.
Actually, if I can add to what Alex and Simon were saying. So we're doing a project together, by the way, between Simon and Eddie. So feel free to jump in as well. When we mint and when we burn, these are all smart contract terms, and you guys know better than we do. Without Alex, we need human beings. With Alex, maybe we have less human being, or maybe still need some manual process, because the process of KYC, knowing your clients, the process also for AML, anti-money laundering, is so onerous. It depends really who you are, where you're from, how much are you trading. So and it depends on countries. So Simon in London, me in Hong Kong. Different regulator. I'm subject to SFC, you are FCA. So different standard even for a Niki, same person coming to trade the same products. So why is it relevant is if you don't even start with the right steps to automate your process. Again, by that it means trusted data, source data is trusted, you have people contributing data, you source the data from the government potentially, which is a trusted source as well. You don't really get to the efficiency part. So that's why I want to skip the discussion on efficiency, because it's so hard. It's actually okay to be transparent, but it's so hard to be efficient without the right ID to start, decentralized ID. So, and the way that we execute our smart contract, just for everyone to be interested, and Simon and Eddie are doing the same thing, is we try to, obviously stage 1 is easier, a bit more manual. Stage 2 is to incorporate all this process under an automation, meaning that we incorporate the ID, then we also, that's the buyer and that's the seller, and then boom, and there's a process. In case the seller is a bad guy or the buyer is a bad guy, and we found out, we can reverse the process, we can burn that tokens. You know why we have to do it? Because now we talk about capital market, these are security tokens that regulator has requirements to protect investor interests. So all these are by now done within the smart contract, meaning these are automated process. But then if you have garbage in, then you have garbage out. So Alex, make this beautiful garbage into something beautiful.
And if I may add something on that, so you mentioned your regulators in Hong Kong, your regulators in the UK. Well, guess what? The GLEIF was actually created by the Financial Stability Board after the financial crisis,
standard, yes.
Because it was trying to solve a problem of global identification of financial institutions. And GLEIF is still overseen by 70 regulators from all over the world, including Hong Kong regulators and the UK regulators. So it makes it as an obvious and an easy choice in terms of identification system for legal entities. And the verifiable credential system that we've put in place is also obviously overseen by that regulatory, we call it the ROC I love it. Regulatory Oversight Committee, nothing to do with rock and roll. But it is sometimes rock and roll to deal with them, but it makes the system very robust at the governance level and very much recognized across the world. Right. So, non-for-profit, by the way, not a commercial thing. It's a protocol that is that we invite you to use and abuse as much as you can in your implementations.
But you can almost play a game of regulatory arbitrage because the regulators are doing things differently. I mean, there's regulators are at different stages of regulating this space, right. And different regulators are regulating it in different ways. So as well as regulatory clarity, we kind of want regulatory consistency, yes. Ideally too, and the digital ID thing is really interesting. Again, we're working on a project to kind of prove that in the institutional world there is a way to move a digital ID of someone who's gone through KYC, AML, and has this sort of bona fide regulated digital ID that you can move it from one to another across different institutions, and they're all happy that it's being done, so people don't have to go through the process again and again and again. So it's interesting, but and exciting.
Happy to work together because that's clearly a use case for the VREI, and that's already being experimented in some countries. So issuing a company with a VREI, issuing a credential to its customer to enable them, once they KYC, to enable them to reuse that credential to access other systems and other services.
Yeah, and again, we actually use LEI already, legal entity identifier. We use LEI already. As a matter of fact, now it's a matter of making it decentralized, meaning on blockchain, or cryptographically proven, whatnot. So it's a way that we transfer the data, the way that we talk to each other, that is on blockchain, so-called, or blockchain relevance for the audience. Absolutely important. But that's it. You want to make sure that process, after you have all these amazing things, your product give your customer, I'm not sure about cheaper sometimes, maybe things are not cheaper. I mean, actually, sometimes you buy a bottle of wine that's more expensive than a cheaper wine. For good reason, the wine is better. So we're definitely producing a better product. And by that, it means you earn more and you get better transparencies. And you probably get better liquidity because of better transparencies.
So Eddie, that's a good segue. So I mean, that's a great overview of use cases, benefits, opportunity.
Yeah.
Let's spend a bit of time talking about challenges. But we're, again, tremendous opportunities there. But Alex, I wanted to start with you first. Is it a question of the international nature of the problem you're trying to solve? Is it apathy? Or is it something else? What is the key problem or challenge that's standing in your way as you go up the adoption curve?
Well, it's clearly the fact that we don't live in a world with one country and one regulator and one way of doing things. So even though this system has been created by regulators and is still overseen by regulators, the way it is being implemented in every jurisdiction for what purpose is different. So I need to deal with that variance of the implementation of the same standard. But that's not a major problem. I think the current situation, the current challenge I have is we've created this verifiable credential system that needs to be incorporated or at least recognized in the various regulatory framework around digital certificates, around verifiable credentials that are being put in place. For example, in Europe, EIDAS 2.0. In China, it's a different regulation. In Hong Kong, it's a different regulation. So my challenge now is to make sure that the VREI system, so the verifiable credential system that we've built, is as recognized as the LEI system across jurisdiction, and that a VREI credential issued in Hong Kong can be recognized as a valid credential in the UK, can be recognized as a valid credential legally, I'm talking, in Belgium, where I'm from, or in Switzerland, where I live.
Simon, from an Archax perspective, I mean, you work with very large enterprises as well as obviously more innovative players like Arta and so on. But as you engage with particularly the larger organizations, where are you seeing some of the challenges in this kind of blockchain or digital asset adoption curve again?
Yeah, I mean, I think there's we've kind of talked about some of those regulatory challenges, and in particular, I think another thing to consider is, typically if you offer a product or a service, you do it from a location and you're governed by the regulator that manages that jurisdiction. That's pretty clear. And if you're a participant or an end user and you're domiciled in a particular place, you're governed by the regulations in that particular place. But, in the current world, or where the world is going, where does a decentralized product or service really fit? If it's going to be regulated, which regulator oversees it? People are much more like digital nomads these days. I mean, where are they really domiciled? Where do they fit? So I think there's, the kind of the status quo as to how financial markets were regulated and how people participating in financial markets were regulated are going to have to change. There's going to be a shift to evolve all this. And coming back to your question, the challenge for institutions is they need clarity around that because it's quite difficult for them to get involved, anyway. So some of my thoughts anyway.
Absolutely. I mean, Julian, do you have a contrasting view here? Is it about targeting the right market with the right customer with the right offering? Do you think that's part of the challenge or something else?
I could probably write a Bible on all the challenges. A couple of Bibles.
Get it started.
Yeah.
Preface.
Well, just for interest, these have been the major challenges. So 2018, the very first security tokens, that was the origination. I'll just talk about RWA. Yeah. Used to be called STO. So the very first RWAs were all failed ICOs, mad confusion, SEC chasing people around saying that's an RWA, we're going to fine you, and people saying RWA is illegal, all that. Then you had all these super TradFi people saying they're doing it all. It's all on their own private blockchain. That was a failed mission. We said that from day one. That's coming to fruition now. Then you had the infrastructure. There was no infrastructure at the beginning, of course. Then there was the first guys with the token issuance guys. They were selling the dream, liquidity, global markets, but they have no licenses. There's one or two left. Then there was the security token exchanges. They didn't help on the primary. They were waiting for the assets to fall out of the sky. They weren't there. There were no market makers. And you had this huge amount. You had years from 2018 to 2022, really a bunch of TradFi people or super inexperienced business people thinking if you tokenize a real-world asset, and your exit liquidity is going to be the idiotic degens. So I had all these terrible assets that made no sense. Real estate, why would I do a real estate token that pays 1% when I can get a REIT on the ASX or whatever at 6? So again, this is part of the Bible in chapter 1. And then, so we have all this, there was a lot of issues. So, and it's gotten better. And so what's happened actually, kind of ironically, the real reason why 99% of people in this room, if you're all crypto people, know about RWA, was in the last kind of DeFi meltdown. The major catalyst was like there's hundreds of billions of dollars of crypto earning no yield, and people went, oh, tokenized treasuries, put it on chain, so those guys don't have to get into fiat. They're actually buying treasuries, but they want to stay in crypto. And that was the first time that the crypto industry, in brackets, stopped hating on RWA and went, okay, we've got a real use case. And then that kind of cascaded into what else can we do. And then the other probably major challenge that was solved was Larry Fink saying everything's getting tokenized and it must be on public chains, and now everyone wants to be second, no one wants to be first. So yeah, there's a lot of other things, but they're kind of the main ones.
Well, to Simon's point, because now if I have clients who want to buy my token from London, I may be at risk because the phone call comes from London. So I work with Simon, pass the order back to him, he executes in London. So we kind of solve the problems on a regulatory standpoint. We're safe, but then we're adding layers, I thought we're supposed to be decentralized, but anyway, turns out you have more people involved. So that's one challenge. So we need regulatory clarity. Another challenge, which is also you can see as an opportunity, actually, a big opportunity, is I think all of you probably have a crypto wallet, so this is the wrong crowd, but if you were in a more traditional conferences like yesterday and the day before, where there are more diverse topics, maybe 1/10 of the people have our crypto wallets. I'm sure they have a bank account for sure. Everyone have a bank account in Hong Kong. You will have Hong Kong dollar, US dollar, euro, sterling maybe not, yen probably. The amazing thing about Hong Kong, and they have done extremely well, is tokenizing Hong Kong dollar, tokenizing renminbi CNY, they call ECNY, EHKD. So Arta Tafin is actually selected to participate in the Hong Kong MA, the Central Bank of Hong Kong MA project Ensemble, our goal collectively, again, not one person's job, collectively, our goal is to bring 9 or 10 people who don't have a crypto wallet, but who have Hong Kong dollar, and turn that Hong Kong dollar into HKD, and don't worry about it, they don't know how to do it, so the government does it for them. And take that Hong Kong dollar into a tokenized product. So that's our job. That's what Project Ensemble is all about. And we run it as a business. I mean, we don't run it as a charity, we don't run it as an ideology, we run it as a business. That we need to make money, otherwise we'll go out of business. The end game in a matter of 12 months to 18 months, we think, is everybody can use the CBDC or stablecoins or tokenized deposit to buy tokenized asset. Some of which will be related to capital market, maybe a fund, maybe a real estate by then, because guess what? Normal people can buy real estate, they may use a token, that's better. More importantly, trade finance. So receivable financing is something that we look into as well. That's our use case for HKMA. We're assigned the task to create RWA tokens in trade finance and settle with CBDC. Huge challenge. I mean, I won't go through a challenge, otherwise you and I can write a book together. We probably can sell a good amount of books. It's a lot of chapters of challenges, but it's also a great opportunity because now you kind of think maybe we can now truly decentralize the whole thing because everybody, whether you have a crypto wallet or not, as long as you have a bank account and some sort of tokenized money, you can participate into tokenized asset. That's what we work on.
Excellent. So yeah, I completely agree.
We're only accepting BTC for our book sales.
Oh, we do, actually. We do, actually.
No Ethereum.
I was going to extend out. Collectively, we could write a very chunky book on challenges. So let me start with Simon. So what I'd like to do, a few minutes left. Everyone get out the crystal balls. So it's October 2024. We're going to look 15 months ahead at some point in the next 15 months or so. What do you think is going to be the most exciting or most impactful thing that's going to happen in blockchain, digital assets, crypto? Completely up to you. Can relate to your business. It doesn't have to relate to your business. Completely up to you. But just, I think the audience, given the wealth of experience on the panel, would love to hear from you. So Simon, starting with you.
That's great. I can come up with all the ideas, and they have to think of other ones after. So
or feel free to alternate if someone wants to jump out.
No, I think the continual trend for real-world assets to get tokenized, I think that's a growing trend which will continue, and I think momentum will build. I think one of the most important events is the upcoming election in the US, because that could see a massive change. I mean, there's the biggest economy of the world, pretty much, or the most powerful economy of the world, restricting the way crypto and digital assets can proliferate. So, I think that could herald a lot of change. And the other thing I'll just throw in there is stablecoins. I mean, at the moment, what is a stablecoin? We tend to think of stablecoins as being backed by fiat in some way. But actually, we've got people looking at stablecoin projects that are backed by other kinds of assets. And as long as you have some kind of proof of reserve of what those assets are in real time, then why can't that be a stablecoin? It doesn't, and those assets might be tied to the use case for how that stablecoin is going to be used for payments. So I think those are, and I think something interesting for the next 12 months or so.
Tokenization, US election, stablecoins. Alex, over to you.
Well, digital asset has been at the agenda for the last many years, starting with pioneers like you working on that topic, and now it's becoming clearly a mainstream topic. We're talking about digital assets moving from blockchain to blockchain, which is the great thing that Chainlink enables. Now, I think in 16 months or 18 months from now, we'll have the same discussions about digital identity and how digital identity can be portable and also, like digital asset, be reusable and movable from chain to chain. And that's obviously what I'm working on.
Love it. Julian?
Yeah, I think you can see the world all coming towards basically RWA. You've got Robinhood's buying Bitstamp. You've got interactive brokers already a long time ago selling crypto. You now have Coinbase and these other guys trying to find out legal compliant ways to add RWA tokens. If you go back to 2021, Binance and Bitfinex and FTX all launched tokenized stocks without no licenses, pull them down. So I think the next 18, whatever the next period of time you mentioned, the really exciting part is you're now starting to see this is why we built towards, the crypto guys are going to start adding all of the RWA assets. And of course, the TradFi guys have already added Bitcoin. That's what they're doing. Now they're going to do what should be easier for them, which is RWA. So it's going to be a mad explosion of RWA assets. And hopefully that lessens the next crypto bear market because there's actual real underlining growing throughout that.
Thank you. Eddie, get the last word.
12 to 18 months, I know for 12 months, in 12 months' time, I'll be back in here for sure. That's one thing for sure. Back in SmartCon.
Reasonable short-term time.
Yeah, 12 months, 18 months. Two things. One is you start to see a lot of real-world tokens with real-world yield, real-world income, real-world revenues competing against crypto yield products. And that's not a good competition. That's a tough one for crypto yield products. Yeah. Two, I think stable coins, Simon and Eddie, we're going to do some good stable coins that will also interact well with CBDC. That may be 18, 24 months, God knows, but the interplay between CBDC and stablecoin is going to be so important. Probably less so for capital market, my personal view. It's more relevant for trade finance. And trade finance volume is huge, and that's probably where we start to have a probably ballistic growth in exponential growth in size, which we're yet to see.
Wonderful. Ladies and gentlemen, please join me in thanking our amazing panel.